crossed. Fingers crossed. I think we good. Good. Hey, good evening. Beast Mode Brandon back again. How's everybody doing? You always know it's a good day when we got our merch rolling. We made some money today in the markets. You know my love for the markets, right? One of my favorite things about the stock options, we were just chatting about this before we pressed the record button, but one of my things is like the stock option aspect. You can only risk, like you can only lose what you risk. So when you buy a stock option contract, you might buy something for say $200, and worst case scenario, you're going to lose that $200, right? Say for instance, a little story before we get ready to roll. 2 weeks ago, or it's 4 weeks now, first week of August, took my family and my in-laws all with me on vacation. We got the King Suite at Great Wolf Lodge, right? Best room you can get. I think for the week it was like $6,500. And guess what? You pay it, you don't get nothing back, right? When you take a stock option trade in this crazy volatile market, it's going up, down, and I like it because say you put out $6,000 trades with our probability, right? We expect to win 4 out of 6, 5 out of 6, 6 out of 6, which that results $6,000 might turn into 8,000, 9,000, 10,000, even if 6,000 turned into 7,000. You can never be mad with a green bag, and you just keep compounding that. So anyway, happy Tuesday. Appreciate you guys. Let me run through what I got to do first, and as promised, I'll open it up at the end for questions. If for anybody that has any specific questions they want. Also, Thursday night, I do a trading tune-up. Just I call things out on my side. I want you to understand why I'm taking some of the things that I take. We do Freebie Fridays, so if you have friends or family that want to come and see how crazy we are, let me know. I'll send them a personal link. We'll get them in there. And then if they like to do what we do week in and week out, we get you plugged into we'll get you plugged into the mastermind with us, and we rolling. So it's like you selfish if you ain't inviting in your friends and your cousins, because look, we all winners, you know, and you surround yourself with the winner, you're going to be the next winner. So don't come in with the poor mindset, or I'm going to ship you to the mindset call with Jamar Mondays and Wednesdays. I mean, you know, we got it all. You know what I mean? So anyway, my love for stock options is here. That's why I come on and take time away from my family to talk about this. So tonight's topic, we're going to go over how to make money this month using the Beast Report section of the DCG Mastermind Report. You know, we put the report out every single month, and we put it out 30 days advanced, meaning that we already have forecasted what we are anticipating the markets to do this month. Is it 100% right? Heck no, it's not. But it is very, you guys got to mute yourself. It is very, very on point. And I say 8 out of 10, 9 out of 10, if not 10 out of 10. It's basically telling you what's going to happen, or from a probability standpoint, should happen. So then you use the report and sync it in with the trades that I've given you. I went back 20, 25 years. I found strong personality stocks that typically push up in the month of September. And if we know the probability to push up in September, and the probability of September within the first 2 weeks, we'll typically get a little retracement. Perfect what we saw today, setting us up for a cheaper price. And if we know history is on our side, say 22 out of 25 years, these stocks got to push to the upside. Is that something that you'd want to put yourself in position with? If it is, just put a 1 in the box right now. To me, I'm going to put a 1 in the box because that's something that I'd want to put myself in position, you know? And that's just where it's at, you know? PG paid today. Hey, appreciate it, B. Torian, not a problem. But yeah, so it's like we are doctors, and each month we come in with this plan. So enough chatting. Let's get ready to rock and roll. I see tons of 1s in the box. Appreciate you guys. Let me share my screen, and we can roll with it. So you guys see the coloring book, I assume. And we're going to roll here. All right, so first things first. You do not have the report, right? I don't want to hear anybody. Don't say they don't have it. You come in here to level 3, DCG Mastermind Discord server. You come in here, and Jamar puts it out every single time we release it. He's the first person that pushes in. And you can see today, Not today. Where was it? Right here. September 2024 Mastermind Report. So once again, you can find the report in the Stocks and Options Alert. Jamar also probably puts it in the Facebook group as well as in the Mastermind Alerts channel. Anyway, you come into the Discord here and you come on scrolling down here to the alert section, Stocks and Options Alerts. I'm sure you put into crypto alerts, and I'm sure you put into Mastermind Alerts because this report is universal for all markets, right? So once you click that, you download it. Now I don't want to hear anybody say they can't follow along. All right. So then when we download it, what do we have? We have this right here. Mastermind report for September 2024. Everybody see that, right? So you come over here and you can get your this one don't have the table of contents, but in DCG Elite IO, it does. All right. So I'm going to make this a little bit bigger. We're going to put this 100% so we can kind of see it, right? Tons of knowledge and information inside this report. Highly recommend going through it, going in it, and getting plugged into it, right? If you are Mastermind Light and you're on this call, I allow some of you guys to come in on this little pop-up. Told Mike I was going to surprise you guys, so I'm not sure if you guys have the report, but you can kind of see what we have, right? This is one of our biggest trading secrets or gems, especially inside the Mastermind. Anyway, scrolling down, we're going to come down in here. Like I said, tons of stuff right here. You got me, Nick, Mike, and there's myself, Jamar, all of us in here. We come together and we put pieces in the report. So I'm going to fast forward down here. Up here, we have typically the averages for each month. You come down here. This is a good section right here. When you have the B's, that stands for Bitcoin, and the bulls, that's the stock market. What do we see today? Historically, these first two trading days after Labor Day of September are typically down. What are we expecting next week and the following week? We're expecting a nice two-week pop. Knowing that, what do we want to do? We want to position ourselves on a red day with some of our call trades, right? That's the most simplest approach I could tell you, but I take it one step further, right? Keep scrolling down here. Tons of stuff. I don't want to give you all the things because we do making this open. All right, right here. This is the next thing. The Oracle breakdown. This goes day by day by day. And this is for crypto and this is for stock options, right? Real simple, bullish, predictable days. We're expecting the market to be up the 9th through 13th. We come down here to the 9th, which is Monday. 13th is Friday. So next week is historically probably September's best week. Does that mean it's going to be green every single day? Absolutely not. But historically, that typically is what happens. Then you got your bearish, predictable days, right? Historically, the last week of September gives us that nice dip, which sets us up for a good stocks in October, and we do it all over again, right? If some of you guys traded the report stocks with me and you saw how powerful it is and made some money, put a 2 in the box. If you never traded any of my stocks off the report, put a 1 in the box. Let me see something real quick. Put a 2 in the box if you traded the report trades with me before. I'll put a 1 in the box if you never taken nothing. And if you put a 1, that's fine. This class is going to sum it up for you right now. So I see 1s and 2s. I see 1s. All right, Dion, we're going to change that. John Mill, we're going to change that for sure. Hey, not a problem. So this is how we trade this, right? We use this Oracle report. And one section of the report, let me get my drawing tool real quick. Just the weeklies, and that's fine. That's fine. You know, everyone starts off at different areas. Once you get a little bit more advanced, a little bit larger account, then you sprinkle this in because you come in and trade. The weekly hit list is our tree trunk is trading, and one branch vine is the weekly hit list. One branch and vine is the weekly income plays. One branch or vine is our report trades. One branch and vine is the random plays that me, James, Crypto Black, Jamar, we post in Discord. The power of all four is what makes the tree unbearable, right? Nothing could happen to that tree if you use proper risk management. I'm telling you, you hear me say all the time, use proper risk management, you stay disciplined, trade the plan, and you use risk management, right? Consistency, following the plan, risk management. Those three things. I want a forest of DCG trees. Don't come in my yard, Dion. I got them all. No, I'm just kidding. Anyway, so this is what we do right here. Historically, if we see that we have bearish days right here, these are days we're looking to take positions on swing trades. All right, we're looking to take positions on swing trades. You come into bearish or bullish predictable days, we know we want to be in before, right? We want to be in before the 9th through 13th, because guess what? If we're buying on bearish predictable days right here, these first 3 days, today, or I'm sorry, tomorrow, today was a great day. Tomorrow is supposed to be another bearish day, and so is Thursday. If tomorrow and Thursday are bearish days, you'll see me alert the trades, take your positions on them, because we want to get in and then we want to be out by this. One common misunderstanding is this right here. I do not trade to be in the markets for X number of time. Let me explain. I trade to be in the market to make money. If I can make money in 5 minutes and I'm in a swing trade, I'm taking my money. Just because I got 6 weeks of time does not mean I'm holding it 6 weeks of time. A lot of times you hold it for 5 or 6 weeks, you actually are going to end up losing out everything that you could have possibly made. So I say that to say this. If we buy a swing trade tomorrow and the following day we're up 35 or 40% or 50%, put a 1 in the box if you taking profits, put a 2 in the box if you holding for it the 6 weeks of time. Me, I'm putting a 1 in the box. You know why? I'm not greedy for 1. For 2, we get these trades every single month. Every single month we have a new trading idea. You always get opportunities. You don't have to be greedy. The last thing I'm going to say before we really dive into this, you do not grow your account unless you sell out for a profit. So you mean to tell me, and there's been tons of people that sent me messages, right, that, oh, Brent, I'm up 37%, I'm still holding. You're up 37%, and you're telling me that you're still going to hold that trade. Now, hear me out. I tell you guys to put a trail stop limit in, right? We have another class, trail stop limit MasterClass, at 15%. What's 15%? That means if I go up 15% ROI, I'm going in a 10 or 15% trail stop. Once I hit 25, 30%, I'm going in a 5 or 10% trail stop, right? And that's more advanced. You want to be super easy? If you go up 15%, you go in a 10% trail, you just let it go. And you're up 37%, you're questioning not taking the trade. Another thing I'm going to say is I ain't going to pick on anybody, but if we have certain trading ideas, right, like we're taking directional calls and puts, I ain't taking strangles on these trades. Now, on Friday, if I take a strangle, I take the call and the put, right? Don't try to guess one side and not the other, because a lot of times you're going to miss out. So when I went on vacation, I made $5,000 over the weekend. Basically paid for my whole trip in one day. SPY gap down like 110 points. NVIDIA gap down like 12 or 13 points. I think SPY made me net profit like $3,300. I think NVIDIA, or I think it was like 22 or $2,300. I think NVIDIA was like $1,800 or $1,900. And then we had one more. We had CAT too. It was absolutely absurd. Don't be the individual that takes one side and you don't get to take the power of that technique. I say that to say this. Remember that tree we talked about? Report trades is one of them. They're directional trades. Weekly income trades is another specific technique, which is different than the report. Then you have our iron condors, which is a completely different tree trunk. Then you got the weekly hit list, which is a different tree trunk. They are all technically swing trades, but they have their own set of rules, right? All right, that's enough now, right? Let's dive into the goodness. So we have our bullish, bearish, predictable days. Let's fast forward down here to my section right here. Where we at? All right, right here. So coming into the report, right? This top section right here, where we're in right here, right? We have a couple sets of rules I need you guys to understand. All right. Rule number 1, we are buying third Friday following month. Sorry about my handwriting. I'm saying it. Third Friday of following month. Everybody got that? Put a 1 in the box right now. Everybody got that? What's the third Friday of the following month? Well, if we're in September right now, I see 2 1s. I better see 30 1s in the box. I see a lot more coming in. All right. If I say the third Friday of the following month, right? What does that mean? If we are in September right now, right? We are in September, right? What's the third Friday? Because these are weeklies. October 4th is one. October 11th is second. October 18th is the third Friday of the month. So once again, these are the third Friday of the month. All these strikes expirations will be October 18th. And that means my birthday is on a Saturday because my birthday is October 19th, right? So you're right, Gretchen. Look at you. You're a rock star. October 18th is what we would be taking, right? So that is rule number one. Where is my chart at now? Is it hiding behind here? There it is. All right. So third Friday of the following month. Second rule, right? Same things as the weekly hit list. You want your bid plus ask to be less than 20%, right? You want your open interest to be greater than 100, and you want your delta, you want that to be greater than 19 or 20 cents. All right? That's how easy it is right there. Those four rules right there, right? The next thing, right? I'm going to put a star over here. You want to know why I have an 87% and higher probability over the last 3.5 years inside the mastermind? Does anybody know why? Because I follow these rules right here. I am consistent. I am like a robot, right? And I want you to be like a robot trading these because consistency, trading the plan, and using risk management, that's what gets you paid, right? The star over here is this right here. I take three positions max in this trade, in these trades up here per month. 3 positions, right? What I mean by that, if I have $500 to trade with on one stock, I'm just going, and you can do the math for whatever you're trading. If I got $500 into one stock, I'm starting out with a starter position at $250, right? If that thing goes against me, my $250 is going to fall down to about $150, right? So my second position might be $150, and my last position might be $100 if it keeps going against me. All right. Now remember that. Down here, my stop loss, I have a stop loss. I don't have a set stop loss. My stop loss is the last day of month. That's my stop out. Let me explain real quick. So if we know Nike, right, first stock right here, if we know Nike has a strong probability to push up 2-3 weeks out of this month, do you want to take a loss in this trade? Absolutely not. However, we don't know when the institution levels are going to push Nike up, right? You follow me? We don't know when the institutional levels will push Nike up. We do know over the last 25 years, 23 of the 25 years, we got an expansion move on Nike. Once again, if we know that, that's something that we want to put our money into, right? So, on tomorrow or the next day, on a bearish predictable day, I'm going to take my first position on Nike, right, with $250. If Nike never pops up, the next bearish predictable day, right, the bearish predictable day, I'm taking my second entry. Why? All right, well, think about it. If we enter here and the stock falls down here, don't you think it's wise to take your first buy and the price comes down right here? Now you take your second buy way down there. Now your first entry and your second entry, guess where your average is? Right here. So then right here in the middle is our entry. You need 1 or 2 good days to get out of that trade for a winning position. And guess what? You got another winning trade out of it. Right? Brilliant, huh? Sometimes news plays a factor, and we may have to enter in a third time the same position. It'll bring our cost average down a little bit, but then before the last trading day of the month, we can get out of that trade for a net winning trade. That is why I have an 87% probability. Does everybody understand that? Put a DCG in the box right now if everybody understands that. So the key is to give you the added arsenal, right? The bows is to give you the added arsenal. If that does happen, we have the luxury to take another position. Everybody understand that? Give me a DCG in the box. It doesn't always happen, Antonio, but I will average into it, and that's part of my plan. And I'm sharing with you my plan right here. Doesn't always happen. Sometimes it does. Very rarely, but I like to have the luxury to do that. So if I'm putting $1,000 into the trade and it goes against me, I'm not putting all $1,000 in the trade. Now you're stuck, right? I'll put $500 in the trade. So when my $500 turns down to $400 or $300, I'll add another position, and then it brings my cost average from 500 down to 400 or 375. Nice. That's dope. And that's part of my plan, right? That's why I have it over 90% probability. I say 87 to undercut it. So for one, you win more than 87% of the time. You're happy. For two, I'm not putting, like, even down here at the Leafs, I don't even want to tell you what our probabilities on that, because once I tell you that, then you don't use risk management. So that's our rules right there. Third Friday of the following month, we want our bid and ask to be less than 20%. We want our open interest to be 100 or less. We want our delta to be 19 cents and greater. And we want to give ourselves the advantage to enter into position 3 times if needed. And then if that trade, that bugger does not push or expand in our favor, the last trading day of September, which if we look at the calendar, would be September 30th. If for some reason our trade does not push up by September 30th, then we're going to cut it September 30th. Well, guess what? Well, Brandon, that's a long time to hold that trade. Don't you think it's going to be a 90 or 100% loss? Has to be the bid and ask. The bid and ask. So now think of this. Remember, we're buying the third Friday of the following month. That's why it's super safe. Our positions, I can't say never, but I've never taken a 100% loss. I think in the last 3.5 years, I think one time I took like a 60% loss. That was probably the largest loss I took. My biggest winner was probably 600-700% just off this report trades. But you're going to get a lot of 20 to 30% ROI winners, and typically your losers will be about 20 to 30% as well. So that can give you the confidence, right? All right, now let's dive in. I'm going to erase all this. We all should understand how to trade the report, make some money this month. Now let's get our strikes. I'm going to walk through every single one of these stocks, how to do this. We're going to put it up here so that you guys have no questions. So on the call side, we have Nike and UAL right here. So now we're going to come to our options chain. Let's type in Nike, NKE. Third Friday of the following month, you come down here to October, right? And here's everything in full effect. Our bid and ask is right here. Our open interest is right here, and our delta is here, right? Now let's say I'm gonna pick on Andre because he's a good dude. Let's say I like to put in $1,000 in a trade, and let's say Andre is working with a $2,000 account. So realistically, he shouldn't really have more than $400 or $500 into a trade. How can Andre take part of this trade and still take a piece of the action, but still be safe? And this is why we have these rules. You want your bid and ask to be less than 20%. You take your bid, you divide it by your ask. This is obviously way less than 20%. You come into something like BKNG and look at the bid and ask on this thing, right? Check this out. Look at the bid and ask on this right here. $2,600, $1,900. Look at this. $1,700, $1,000. That means if you market order into this trade for $1,700, and Andre says, yo, B, we're going out for some steak dinner tonight. Sell out your position. I got to come pick you up right now. All right. If I market order out of that trade right here, right now, my $1,700 now turns into $1,000. I just lost $700, which is about 45%, 50, almost 50%. Everybody understand why it's crucial now to have a 20% or less spread between the bid and ask. Put a 1 in the box right now. I know I'm making you guys work tonight. Put a 1 in the box right now. All that dust coming off your keyboard. All right, so everybody understands why that's crucial. Perfect. So the next thing, we want our open interest to be 100 or more so we can get out of the trade. And for everyone that has different accounts, we're going to use deltas, right, to determine what we can take. So on this one, right, ideally, I personally like to buy contracts that are about $400 to $500 if I can. So for me, I'm probably taking this contract right here, right, on the call. 82.50 calls. It is, I'm going to erase that now. It is $385 for one contract, right? Say you have a smaller account and you can only risk $300 or $400 into one trade, right? You can't take that. So now you come in your delta and you come all the way down here. You can take this trade right here, 24 cents. Well, guess what? This is a 90 call, all right? I know every single person in here can afford $140. Now we all can participate together. That's why I quit posting when I take trades what I get filled for, because if Andre takes this one right here at $140 and it moves $1 in our favor, he's only up 24 bucks on one contract, which is phenomenal. He's only up $24. Me, I'd be up $50, right? Man, Brandon, why are you up $50 and I'm only up 24? Now remember this. I'm risking $385. Andre's risking $140. Everything comes back to the ROI, right? This is how you got to look at the ROI. Screw the dollar. Look at the ROI. If Andre got $24 and he paid $140, 24 divided by 140, would you be happy with the 17% ROI return? Absolutely. Absolutely, right? You'd be happy with the 17% ROI return. Now me, I'm up $50, right? 50 divided by 385. Andre's I'm up 12%. So my trail stop limit didn't even get hit yet, but Andre's risk-free already. So he's actually a step ahead of me. The reason we say that, 19 cents, if you go any farther out of the money, now you're playing with fire, and the probability of you getting a winning trade out of that is a lot more slim. So does everybody understand those concepts right there? I see tons of ones. All right, let's get our list rocking and rolling.
Hey, Brandon.
Go ahead.
Hey, my bad. It's Tori.
Yeah.
I know you just went over the 20%. I was putting the kids down. I didn't hear the whole thing. When you say 20% bid and ask, what do you mean by that? Can you explain that a little bit?
Absolutely.
20% from what price?
We're just going to break it down slow for you. So right here, if we look at this 82.50 call, we're going to what's the difference of the bid and ask? Well, you take the 375, and you divide it by the ask, which is 385, and what's hold on a second. 375 divided by 385. What's that percent right there? If you times this by 100, what's that say? 97.4%, right?
Okay, I understand now. I got you.
So really, the bid and ask spread is about 2.5%.
Okay.
Follow me?
Yeah, I got it. Appreciate it. Okay, I see what you're doing now. That's the only part I didn't understand, but I see where you're getting that from.
Absolutely. And then the other example, it was $1,000 and $1,700. So if you take $1,000 and you divide it by $1,700, that's about a 46% bid ask spread. See the difference?
Yeah, I see that now. Okay, I got you. I see how you're doing the math.
All right, awesome. Yeah, if anybody else has any questions, just pop out or throw it in the chat. All right, so report trades. We're gonna do NKE, and everything will be posted in Discord. NKE. So for all of us to take advantage of this, right? We're gonna get loaded up. We're at 81.32. You could definitely take the 90 calls or the 87.50s. So Nike, we said 10-18 expiration. We're gonna take 87.50, and or 90 calls. All right, that's Nike right there. The next one on our list. Where my thing go? The next one on my list is UAL, and then Walmart. So then we're going to go a little bit faster so we can make it through all this. UAL. What do? Third Friday of the following month, we go down to our criteria. Delta needs to be 19 cents and higher. So we could actually come right here. These are 89 cents. It's a little bit too cheap for me. So I'd probably bring it up a little bit here. Look at our open interest right here. 27,000. That is a lot of people at the party. The probability of it going to there is very good. And it's $248. So I'd probably go, I'll tell you to get loaded up. The $170 for one contract. We're at $206. Probably going to tell you to get loaded up to 46 or 47 calls. UAL, 10/18 expiration. We could take 46 or 47 calls. All right. Next one we said, did we say Walmart? Yeah, Walmart and PG. Walmart and PG. All right, let's check it out. Walmart, WMT. Same thing, October 18th expiration. And here, right here, I'm going to go at the money, 52-cent delta, 30-cent delta. These are $83. So another thing what I like to do is if you have a smaller account, I try to buy all the contracts, give or take the same ballpark. 120, 130, 40, 50, 60, $170. It's not smart to buy one contract for $120, and then the next trade you buy one contract for $710, right? Why? Real quick. If you buy one contract for $710, because you're buying one contract, then you buy one for $120. What happens if you win on this one? Let's say if you win on this one, real simple, say you win 10%, you're making $12 profit. All right, so you got 10% ROI winner. This one, you lose 10%, you just lost $71, negative 10%. Well, when you look at this right here, winning 10% to lose 10%, you would think you should be break even, correct? Remember, the last thing to our thing, trade your plan, stay consistent, and what? Use risk management. If you're risking $710 on one trade and $120 in the next trade, that's not proper risk management. Does everybody understand that? Put a 2 in the box if you understand that. Every single one of us should put 2s in the box. If not, it's all good. We know now. So on Walmart, right? WMT, we got 10, 18. Awesome. 2s are still pouring in. We can get loaded up the 77.50 or the 80 calls. All right. Next one we got PG and Costco. All right, PG, October 18th. Look how much open interest is on this. These are actually perfect. These are our go-tos. Same thing again. Here's $198. Those will tighten a little bit. Going up here, it does get tighter. Sometimes in aftermarket hours, it does loosen up. But I'm going to get loaded up. You could take the 175 or 170 calls. So this one, we got PG, 10/18 expiration, and we said 175, 180 calls. The last one on the call side was Costco, right? Costco, COST. This one's more expensive, $800. Now, this is why we go with the Delta rule. So we definitely need to go far out of the money because we need to go with the 19-cent Delta. This is $700 a contract. So if you don't have a big account, then I would not even trade this. Open interest is fine. So we're going to put Costco, COS, 10/18, and we're going to say the 960 calls. All right, that's for the call side on the report, right? These are the short-term trades. Then we got puts. The puts are the same thing as the calls except reverse, right? You trade them the same way, except we want to buy puts on green bullish days because we get things on sale. So this month we'll be looking at Disney and EA. So let's put Disney, October 18th, and we're going on the put side. Same thing. Open interest is a lot. 43 cents is a little bit cheap. So I'm going to say you should get loaded up the 85 or 90 puts, right? Still cheap, affordable for all, $130. So we're going to say Disney, 10/18 expiration. We're going to say 85 or 90 puts. And what was the last one? It was Disney and what? EA. All right, let's go back to EA real quick. EA, October 18th, same thing again. Delta right here, 25 cents. We're gonna have to get to 140s or 145s. Once again, 180 bucks is affordable for all EA. 10, 18. Yep, I'm putting all this in the Discord and the Facebook, and I'm sure Rhoda will do the weekly recap on Sunday. This one, 140, 145 puts. That's for the top section. Now let's move along here. Next part of the report, right? We have let me scroll down. We have this right here. We have high risk, high reward type trades, BRLL, right? If you do not have extra money, please don't take these. These are what I call like the lotto trades, the lottery tickets. Only take something you're willing to lose. So if you look at the charts and we look at that's the wrong chart. If we look at right here, TGGI, what happens on these, right, is you get something just like this. You get something where you put 100, 200 bucks in, 500 bucks right here at 001. There's 100%, 200%, 300%, 400%, 500%. Take profits at 100%, go risk free, you might get 200%. Then you wait for it to get beaten up, you enter again right there. There's another 100%. So let's just say we got 100% there, 1x there. Then you get it on sale, it falls down, gets beaten up, you get it again there, then it pops up, and then now you're up right here. That's 100%. So it's another 100%. Then it gets beaten up again, you buy here, over here, there's another 100%. Then price comes down, it gets beaten up, you buy there. Guess what? On that day, there's another 100%. Look where we're at right now. What happens with these crappy companies, OTCs, over the counters? They can go to zero. That's why they're risky. But we've already made 1,700% over the last 2 years trading TGGI, one of my favorite ones. Sometimes you got to hold them for weeks, but something happens where news comes out and they do pop. So this month, I'll be looking at BRLL, TGGI, and MJNA. Once again, if you do not have funds, please don't buy that. All right, moving along. Retirement shares. If you have a large account, right, and you don't like stock options, and you're one of those hodlers like you do in crypto, this is perfect for you, right? If you got a smaller account, this is also perfect for you too. Each and every one of us should be putting in 100, 200 bucks a month into a longer term account. Why? Because investing always wins. I shouldn't say always. Probability is there. You know what I mean? So it's hard to lose when you invest in great companies, right? That's all I'm saying. Anyway, you hear me say my motto on Fridays. I day trade for my job. I swing trade to help grow my account. I use the profits of both to pay my bills and invest in retirement shares for free. And then I'm using house money. So I day trade for my job, swing trade to help grow the account, and I use the profits of both to buy retirement shares. My retirement share account right now for me and my wife is all house money. But soon, I'm 35. I'm going to ramp it up, and I'm going to put in probably 500 bucks a month and just keep doing that for the next 5 years just to extremely accelerate it, and then use some of the profits extra and maybe buy another $500-$600. So we could put in $12,000 or $20,000, whatever we want, into our account. It's going to slowly it'll exponentially grow, and then with us buying these stocks, we could take profits at any given time. Like we're in XOM at $40 or $45. It's at 110 or 120. We're in Hershey at 120. It went up to 180. It went up to 240 or 250. We're just collecting the dividends. So you get paid every 3 months. You get a little check into it. Think of it like this: the long plan. You get $1 million account, and you get about 6% a year, right? You make $60,000 a year for the rest of your life. Every 3 months, 15,000, 15,000, 15,000, 15,000. The average person retires in America with $1,500 and $2,000. You're getting $5,000 a month. All right? Every 3 months you get $15,000. Even if you got $500,000, you're getting $25,000. You're still getting $2,000 a month. You're average. You know what I'm saying? So if you prep and plan now, it's only going to get better as time goes on. especially if you're a little bit younger like myself, you have a little bit more time, right? Anyway, this month, I'm buying shares in Bitcoin, Grayscale Bitcoin, which is GBTC. I'm buying Ethereum shares. And at the beginning of this call, I didn't want you guys are opening up a can of worms. All right, hold on, Dion. So we can buy crypto in the stock market with shares, super simplified, right? If you don't got to worry about bridging it here, bridging it there, doing the swap fees, you can buy the shares and mirror crypto for free in the stock market side. And it's backed federally by the government up to 250,000 or whatever. If the government fails, I mean, the world's in deep crap. You know what I'm saying? So at that point, I'm risking, I'm okay risking my money in that. So the plan for these are this right here. You don't have to hold them forever. You know what I'm saying? You don't have to hold them forever because once again, you don't grow your account unless you take profits. If Bitcoin pushes up 10, 20, 30% over the next week, 3 weeks, 3 months, sell out. Take all your money back and do it again because every single month we get this. On average, these retirement shares that I put inside the report every single month, they typically expand at least 5 to 10% ROI within 3 months. So that could be a plan. If you do not want to hold it for the long haul, you could sell out and just keep milking it for 5, 10, 15%, compounding it. You do that 3 times a month. On average, we put 12, 20, they're 36. You can essentially grow your account, or not your account, but your investment of what you put into the shares. You can potentially grow it 300+%. You know what I'm saying? So that's just something to think about. And that's how you think progressively, like your money's working for you, right? I'll be also buying Google with an L shares. I will be buying Disney shares. I will be buying NVIDIA shares, and I will be buying AMD shares. Why? I believe NVIDIA and AMD did just get hammered. It just ran up too far, too fast. Perfect reset. But I feel it's going to be hard for them to ever go to zero because they build computers and AI. We're going to continue to adapt to be more computer strong. So I feel like those companies will never fail. You know what I mean? That's just my opinion. I do eat crayons. Remember that. Not telling you what to do, just sharing you my plan. So these are the shares I'm buying for September. Last thing, you never traded with me before and you want something super safe. This is for you right here, the leap trades. In 23, I had a 100% win rate. In 24, I've lost 1 this year. Now, this is the rules for this. You're buying at least 6 months at a time. If you want to be cheap, ideally 9 months at a time, right? These stocks have tendencies to expand. We don't know when, have tendencies to expand in the next 3 months or less, right? Now, this is how you do it. You take 3 averages, all right? Month 1, September, we buy JPM, and it never pushes up our 15 to 25% ROI to go risk-free. Month 2, I'm picking out a bearish predictable day off the report, and I'm buying JPM again for the second time. If the second time it never pushes up in my favor, I will buy JPM again a third time on the 3rd month on a bearish predictable day. Remember, if we're in calls, options, we need the stock market to push up. If it's a bearish day, that means the market pushes down, right? I will buy in on the 3rd day, if that, or the 3rd month, if that happens, on a bearish predictable day. If at some point I never see profits in those 3 months, I will cut my trade the last day of the 3rd month. Everybody follow me? Put a 1 in the box right now. I will cut that position the last day of the 3rd month. Super relaxed, 100% win rate in 23, lost 1 trade in 24 on these leaps. So this month, JPM, let's take a look at it. JPM, what do we say? 6 months at a time? Well, if that's the minimum, that is the minimum. If there is, on average, 30 days a month, right? 30 times 6, we need 180 days, ideally 200 or more. Come down here, you can go anywhere right here. This brings us out to March. March 25. Same thing. How do we make it affordable for everybody? Well, we're going after money, $1,400. Now, you don't have to do that. You take your delta, you come all the way down here, and you can take closest to 19 cents. You can get they're $300 for a leap trade. Super safe, 92% plus probability. All right. So leap trade, leaps. We got JPM. JPM expiration is 3/25, and we can get loaded up the 255, the 260 calls. All right, that's for the leap trades. The second leap trade that we have, right? I'm gonna give it right up to you guys right after this. PG. All right, PG. I get all types of messages. That's why I do this every single month for us. Same thing, PG. We want 20 cent, 19 cent delta right here, $222. Everybody can afford that, right? Same thing, PG, 3/25 expiration. We can get loaded up the the 190 to 195s. 190, 195 calls. And I'm gonna paste this in the chat. I will post this on Discord as well. All right. Now, as promised, you guys, anybody have any questions about what we just went over, or anything trading related? Does anybody have any questions?
Hey, Brandon, Dion.
Hey, what's up, Dion? Go ahead.
Hey, can you repeat? I just want to make sure when you said you was taking your profits and the leaps, you broke it down by every month. Was that every month? Like you said, you take profits after the first month or you rebuy it again? I was
No, I
trying to
don't ever
take notes on
rebuy
that.
it. I buy it once. So we buy JPM this month, and if it goes in profits and I get profits, I'm done with that. I'm done with that. Right? If I take JPM this month and it never gives me profits, I'll buy in again the second month to bring my cost average down.
Okay.
And then if it pushes up in profits, I'll sell out and I'm done with it. If the second month it never plays out in my favor, then the third month I'll buy in for a third average in. And at that point, if it goes in my favor, I'm done with it. The reason why is because we get leap trades every single month. So I'm not greedy. I just want to be profitable. Does that make sense?
Yes, sir. Appreciate it.
Now, good question. We have any other questions?
Hey, Brandon, I got one.
Hey, go ahead, Antonio.
But check it out, man. When you take the weekly plays, which I know is like more likely going to be a straddle. I mean, yeah, strangle. I think it's the strangles. So when you take those weekly calls and you post I'm going risk free, make me understand how you doing that when you're saying you're going risk free. I kind of understand it, but while I got you right here, I'd rather you kind of show me.
Got you. So all I'm doing is if you change the spread to the strangle or iron condor, whatever we're taking for that specific trade, if you take your strangle right here, the strangle takes the call and the put and pushes it together into
Right.
one position. Even though you have one call, one put, it's technically a strangle, so it's one position. So it takes the value of the call, it takes the value of the put, and I'm trail stopping them as a position one time. So what I'm talking about is if we are taking PG, and we have 10 days of time left, and we called out the 177.50 calls and the we'll say 70 puts, right? We'll just say something like that. At this time, right? Let's say we bought it right now, right? And we paid $106 per contract, right? Because it's per contract of the call and the put combined.
Right.
If you separated them, the call might be 55 cents, the put may be 55 cents. All right, you follow me?
Yes, sir.
So now when I go to close this out, all I do is I right click it, I press close. You're going to see something like this where you're selling them both. Then I come over here to my trail stop solely, and I'll trail it by 10 cents. If I press confirm and send, it puts in a trail stop. Based off the movement of the call and the put itself, it takes all the hard work out of the equation.
That's the part that was getting me. So you're keeping it together. You're not breaking a leg off of it.
Yeah, I keep them together.
Got you. That's where it is. Okay. Now that makes sense.
So like obviously, if we're buying this for 100 and if we market order, if we're buying both these for a combined all right, it wants to be difficult, right? Let me change this. Say we're buying them for say we bought it for $106, and now it says $2.34. That means that we just profited, right, about $120. So if I know I'm up $120 net profit, doesn't matter the winning or losing side. I then come right here to my position. I put a trail stop in, and I know that I'm up 120. I may say, well, I'm going to go in a 20-cent trail stop, except the only difference is it's not going to be green. You're not buying. You're now selling that position that you bought, and the call and the put is worth 240. So I'm going to trail stop by 20, 30, or 40 cents. I mean, there's no universal number of what to do. I base it off of how much the premium of the contract is. Like I'm not going to go in a 5-cent trail if my combined contracts are worth $800 because one little 20-cent movement on the share side is going to knock you out. You know what I mean?
Right. See, that's another thing I was wondering how you determining the trail stop, the percentage on the trail stop that you were setting.
Yep. So it goes off of how much I'm up on the option part, like net profit. So if I'm up 20 or 30 cents profit on the trade, I'll go in a quarter of that, right? So I'll go in a 5 or 6 cent trail stop just to secure profits. If I'm up $2 a contract, right? Then I may go same thing. I may go in a 30-cent trail stop at that point, or 40-cent trail stop because that's like 1/4 of my net profit. You know what I mean?
So take for example, like maybe 2-3 weeks ago, Nvidia made a nice move, almost like $8-9.
Yep. We got that.
Yeah, I caught that one, man. That one was nice. But that's what I'm saying. So at that point, what kind of trail would you put on that? Like a 20-30 cent trail on that one?
Yeah, I'd probably go with like a 60 or 75-cent
Right.
trail.
Okay, that makes more sense. I get you. Okay, now it makes sense.
So it's just universal off the option contract itself. You know what I mean? Because on that Nvidia trade, I was actually on vacation that time. That was one of my biggest winners. I bought 2 contracts on either side. I want to say I had in about $800 or $900 total combined, like $450 on the call side, $450 on the put side, and I think my $800 or $900 was worth like $3,200. So if you take $3,200 and minus a $900 cost fee, that's about net profit, what, $2,200, $2,300.
Green
At
Bay.
that point, if I'm up $22 a contract, I'm not going in a 5-cent trail because the second you press it, it's going to kick you out. I'll probably go in a $2 trail stop, which is $200. Just because I'm a little greedy, and if it keeps pushing, I want to make a little bit more. But then I'm securing enough of the profits that I'm not going to go in a $2,000 trail and jeopardize giving all of it back. You follow me?
Right, yeah, that's kind of leaving the window open too much for the take a lot of. No, you don't want to do that. That makes sense.
Yep.
Hey,
I'm
Brandon.
glad.
Hey, Brandon.
Hold on a second. Are you done, Antonio, or are you good?
Yeah, man, I'm good. I appreciate the breakdown, man. Thanks.
Hey, appreciate it. Good question. All right, who's next?
Hey, Brandon, it's Bill Kemp.
Hey, what's up?
Not much. Hey, let me ask you this. Why do you not break your legs up when, like for example, today, when Spy was shooting down, why not cut the call? Why do you not cut the call?
All right, so today's example, all right, so, and in the simple terms, I don't want to tell you guys only cut one side because then it makes it more difficult. Some people forget legs, they leave things open. I've had it happen to many people before. So in a real simple terms, close the order together, especially if you're trading 1 or 2 contracts. Now, when you get into my territory and you're trading 4 or 5 contracts, you can let 1 or 2 go, right? Now, for instance, today, Spy, it wasn't like a grand slam, but it was a solid single, maybe a double for some of us, right? What happened is on the put side, we were up 80, 85%, 100% ROI, but on the call side, we were only down 40 or 50%. So if you would have let the call side open and the market kept falling, now you actually are making less on your strangle because you don't know if it's not going to keep falling or not. You get what I'm saying? So then instead of taking a guaranteed net profit of 50% ROI right here, right now, today, and you let the call run, and then you come into today or tomorrow where the market's bloody red, you're gonna make a 50% loss turn into 80% loss. So now you're making less. You follow me?
Yeah, but I thought you said you would not close. I thought you said you let them run together.
Now, I do let them run together, so they both close at the same time for that reason right there. Are you following me?
No, I don't get that one. I'm sorry.
All right, so now listen. We'll break it
I'm
down
moving
again.
real slow.
We took a SPY strangle, right?
Yeah.
Call side, we're down 50% ROI, right?
Yeah.
It doesn't matter the dollar amount. We're talking ROI. The
Yeah.
put side, we're up 100% ROI.
Yeah.
Are we net profitable on that strangle, or are we not?
Yeah.
We're net
50%.
profitable by 50%, right?
Yeah.
Now, why would I sell out the put side for 100% and let the call side open and jeopardize the market falling more than it is right now? So instead of taking a 50% loss on the call side, I now take a 90% loss on the call side. I don't walk away with 50% ROI now. I only walk away with a 10% ROI winner. You follow me?
Yeah. So my question is when you see that the market is actually falling like that, why not close out the call side and let the put side continue to run?
Well, let me ask you this: if you knew exactly what the market was doing, why would you even be in the call? Why would you just quadruple down into the put? You follow me?
Yeah, but I mean, I'm talking about ROI for that day. If you see that the market is moving in that direction that day, why continue? Because as the market drops, that call is still losing money.
Absolutely. All
So
right.
why?
So
So
hey,
why not?
I'm not arguing you. I'm saying
No,
I
I'm just trying to.
100%.
I'm just trying to
Yeah.
understand
No,
why you
I see
say
where you're
run
coming
both.
from, but this is the thing. Out of 4 weeks in a month, 1 out of the 4 weeks, you're going to keep getting a more of a continuation. The other 3 weeks, it's going to bounce back, and you're going to actually make less than 100%. So in that same equation, today was an anomaly where it kept falling, right? But the other 3 weeks, you're going to expect it to keep pushing on that winning side, and it's going to snap right back, and you're actually going to take a loss.
Okay.
You follow me?
Yeah.
Just like Andre just said, I tried that last week with spine in reverse, and it cut me deep in the red. That's exactly why I do that, because now we're trying to pinpoint. And I'm not arguing what you're saying. I do agree with you. If that's the case, you can go in a looser trail stop on the put side if you feel that the market's going to keep falling. But in this same example, if we're negative 50% on the call side, right, and we're positive 50% on the put side, and we have a positive 50%. I'm sorry, we're up 100%, right, on the put side. Let's say you sell out the call for negative 50, and then the market, you get one of those institutional candles, and the market goes like this and bounces up. Now you can't get out fast enough. Instead of taking that 50% ROI winner, what if the put side retraces from 100 up here to 60%? Now you're walking away with a 10% ROI because you're trying to time the market with what it should do, and it doesn't always do what it should do. You get what I'm saying?
Right.
And I've seen it. I've been in the game for 8 years. I've tried every trick of the trade, and I just keep it simple now because we've been green doing it real simple way for we lost two weeks this whole year using our AI and our techniques on Friday. So I'm not trying to reinvent it. Now, if you have runners, I would highly recommend going with a runner. We're closing out the call side and maybe going in a 90% trail on the put side on one contract. So in today, you actually would get blessed a little bit more. But I would, me personally, I would never do that on a full position because I've seen it so many times where the market's pushing up, all it's going to keep going. And then you get that huge candle down, and now you can't get out fast enough. IV goes against you, and you have to take less of a winner than if you would have just taken profits originally. You follow me? You follow me, Bill?
What do you say? Yeah.
All right, awesome. Hey, we got any other questions? When Thinkorswim platform, it's separate, so you can trail stop on both the call or the put. Rebecca, you just you press the call on the put itself and close them out together. You can do them separate if you want. I just do them together. So every time I say I'm going risk free, now I get 17 questions saying what amount you going in the trail stop and on which side, and that's why I put them together. I go risk free on both of them. Keep things simple. You know what I mean? I don't like to cause confusion.
Thank you.
Yep. I think what he's saying is that it could reverse. Yeah. Yep. Basically, minimize risk without overexposure to the market. Absolutely. I am following. Nice. That makes a lot of sense to me. And that's why we hop on these calls. Hey, we have any other? Yeah, that is the best. So on mobile, after it gets out of my stop loss range, then I set the trail stop. Absolutely. We have any other questions? All right. If not, go ahead, Gretchen.
Yeah, this one is a little bit different. It's dealing with the iron condor. It's just a matter of understanding. Why is the iron condor, why does it require a margin account versus level one?
Because anytime that you sell options, they require you to trade it on margin. I have no idea why. In a real simple term, when you trade on a cash account, which most of us do, you're buying directional calls and puts. So there's really no risk. Technically, when you buy an iron condor, there is exposure where if it closes the selling options, if it closes above and puts you in the money, technically you have the right to buy the shares. Now, obviously, you're never going to buy the shares if you can afford them. So in order to sell the option premium to protect the broker itself from you owing a lot of debt, they make you do it on a margin account when you sell any kind of options. So I don't understand why they do that. That's just what they do. But that's kind of why, in a very simplified nutshell. I don't know why, but that's just why they do it. And it doesn't. To me, it doesn't even make any sense because when you take that, I mean, you can always close it out before, and you have that max loss and max take profit. You know what I mean? I don't know. I just feel like it's their way to be manipulated, so all the big dogs can trade that, like Warren Buffett. They don't want the minnows. You know what I'm saying? Just my opinion, though. I was on the call Friday and y'all were talking too fast. What indicator do you have that shows the ceiling and floors? I was counting by fingers and pulling out rules and missed the run up. We use the floor and ceiling technique or Trendbox Pro, Andre. Shoot me a message. I get you, bro. Yeah, because you full mastermind now, so we ready to shake and bake. I have a training too, a MasterClass just on the floor and ceiling. So I'd highly recommend watching that. If anybody else wants it, just let me know. I'll tag you in the video. You can watch it, and you can roll with it. And then after you watch it, if you have any questions, feel free to let me know. I believe that I introduced it. I want to say January, the first week of January in 23, or it might have been 22. But every Thursday, we also do a trading tune-up where we kind of go over what we're going to call out on Friday, but really we call those trades out every single day. So I'd highly recommend watching the last 2 Thursdays and see if that fits your trading personality. If it does, then highly recommend getting some homework from me and we'll get you squared away. You know, if you can follow the rules, the success rate is extremely high. I'm telling you. We have any other questions?
Yeah, I got one quick question, Brandon. In the morning when you do your live trade, do you call your plays out in the morning before y'all start trading? Or are you just going over the same stuff that you already kind of went over on the calls the night before?
Absolutely. So as soon as the market opens up, I give you stocks to watch. With a safe plan, if you have a smaller account, I give you stocks to watch before the market opens. And then at 9:30, 9:31, I tell you the SPX Lotto strikes that I'm personally watching. And the second I take them and they trigger, I announce it in the elite WhatsApp chat, Swing Master Pro group. If that's something that does interest you, just shoot me a message. If you're in the mastermind, you could You can peep in there as well. And then right before our levels are put in place, I give the OG people 6 more floor and ceiling stocks to watch. And we got great success rate. You know what I'm saying? So I mean, really, we went over this as well as a MasterClass. We used the scoreboard to find us our stocks, and then we used the floor and ceiling Trend Box Pro to sit back and wait for something to trigger. And I mean, everybody that follows the plan, they all very successful. The ones that are not successful are the ones that can't follow the rules, cut it when they aren't supposed to, and hold it
Get
too
greedy.
long, and they get greedy. You know what I'm saying?
Okay, bet. Appreciate it. Yeah. I definitely catch you in there then. I'm already in the WhatsApp and everything. So I come to the live trading and catch you in there tomorrow.
Awesome. So I don't alert the day trades in the Discord because it's a little bit too fast. I mean, I feel like I'd be setting you up for failure. I do alert all the trades live on the call, or the trading ideas. I can't tell you what to do with your money. But anytime we get a good signal, what we're watching, we share the breakouts, the breakdowns, everything there. So yeah, so the live stream, yeah, the same Zoom you're on right now, you could hop on every day, Monday through Friday. Go live at 9:30 a.m. Eastern time. I'm East Coast time. Those morning calls go crazy. Yeah, we are crazy, I'll tell you that. Yep. Now we got a solid group. I'd say probably consistently 20 to 30 show up every single morning. Sometimes we get 50 to 60 people to show up. But the thing is, it's like not everybody's a day trader, and that's okay. You know what I'm saying? I'd say get in where you fit in, and hey, the green bag's the goal. You know what I mean? Yeah. We have any other questions? If not, all right, perfect. It is 10:15. You guys do me
Brandon,
go ahead.
before you get off the when you said when you run the trail stop when you're going risk free and it combines the call and the put into one position. Can you explain that part again? Like how does that work?
So right here, look, if you go to the spread type, and you go to strangle, and you click on any single one of these strangles, right? You see right here where it says $4.60.
Yeah.
That's combining the 180 calls and the 177.50 puts into one play.
Gotcha.
So when I'm saying I'm going risk free, and I bought it the day before for $2.50, and now today it's $4.60. That means we're net profit of $2.20. I'm saying I'm going risk free, and I'll probably go in a 30 or 40 cent trail stop on the
Gotcha.
call in the put.
Right.
You follow me?
Mm-hmm. I gotcha.
Yep.
Sure.
Awesome. All right. Well, hey, anybody have any other last minute questions? If not, do me a favor. Give me a DCG in the box if you guys feel confident trading the report and you guys want to make some money this month. Give me a DCG in the box. Thanks for the invite. Hey, absolutely. All right, I see the DCGs pouring in. Let's get it. We're going to get a great month in the books. I appreciate you guys. This is streamed live and recorded. We will post the recording up, and I appreciate all of you guys. You guys are the rock stars. So we want to cut it. What about NVIDIA tomorrow? What do you mean NVIDIA tomorrow, Andre? I'm out of NVIDIA, bro. I told you I went risk free today. I'm out of NVIDIA, bro. I'll trade NVIDIA tomorrow. With the news, yeah. Hey, I'll see what happens. I'll see what happens tomorrow. We could trade it. We'll put it on that. We'll put it on the lotto system, and we'll make some money. You know what I'm saying? Yes, sir. All right. Well, hey, I appreciate you guys. I'm gonna cut the recording off. Yeah, we'll see what we get. You know, we'll see what. Hey, we still got another 8 hours, so a lot could change. Hey, appreciate you guys. You also have a blessed one. Catch me on the next one.